Members of Congress look to repeal federal income tax and replace it with a federalized sales tax. Let's break down the FairTax Act of 2025. Here are the newts. Sponsored by Representative Buddy Carter of Georgia along with 14 other co-sponsors, this act looks to repeal the income tax and other taxes, abolish the IRS, and enact a national sales tax. Let's start with what this bill is repealing. It eliminates several key subtitles of Title 26 of the U.S. Code, which is the Internal Revenue Code. Subtitle A, which covers individual, corporate, and self-employment income taxes. Subtitle B, which handles estate and gift taxes. And Subtitle C, which handles employment-related taxes like Social Security, Medicare, and unemployment. The bill also repeals Subtitle H, which governs the Presidential Election Campaign Fund, the system for public financing of presidential campaigns. Along with these repeals, the bill makes conforming amendments across the tax code to account for their removal. A tax on the use or consumption of taxable property or services in the U.S., as defined on screen, would replace this. The tax rate would be 23% of gross payments in the year 2027. This is an inclusive rate, meaning the price paid already includes the tax. For example, if you spend $100, $23 is tax and the remaining $77 goes to the seller. After 2027, the rate would be the sum of the general revenue rate, old age, survivors, and disability insurance rate, and the hospital insurance rate. There are several exemptions made for this sales tax for business and export purposes, investment purposes, and state government functions. The policy provides opportunities to receive tax credits and refunds. These include credits for business use conversion, intermediate and export sales, administrative, bad debt, insurance proceeds, transitional inventory, and any taxes paid in excess of the amount due or refunds. A tax rebate would be made available for families referred to as the Family Consumption Allowance. For qualified families that are eligible, this would be a rebate equal to the tax rate multiplied by the monthly poverty level. This rebate would be distributed through the Social Security Administration. This sales tax system would be administered by qualified states. They would collect the overall gross payments and provide them to the U.S. Treasury. Cooperative agreements will be signed between the federal and state government. States can lose their right to collect sales taxes. In this case, the U.S. federal government will take over the collection. States are allowed to administer other states' sales tax for an agreed fee. This policy would go into effect on January 1, 2027, replacing the Internal Revenue Code of 1986 with the Internal Revenue Code of 2025. It is early within its process, currently sitting with the Committee on Ways and Means. This completes our overview of the current policy outlined within the FairTax Act of 2025. This bill has a lot of depth, so if you have any specific questions, please feel free to ask. Follow Newt, your source for clear, fact-based legislation breakdowns.